I talked to a banker who's been raising capital for 40 years for power companies. He said every time I tried to bring in a new investor into the energy sector, 80% of the conversation is about subsidies and will those subsidies continue into the future and how does that affect my investment? And he's like, and I lose a bunch of investors.
If you look at like the types of power quality that data centers need, behind the meter generation isn't going to be sufficient or reliable enough to actually provide what they want.
It's the only climate policy the US has at the federal level, really. Making renewable energy as cheap as possible was the approach to reduce emissions. And that is the casualty. That's the casualty of the end of subsidies.
Hello everyone, welcome back to the Interchange Recharged podcast. Today we're recording in Las Vegas and actually we're almost wrapping up RE+. I'm thrilled to be joined by Chris Seiple, Vice Chair of Power and Renewables, and Kasim Khan, Senior Analyst at Wood Mackenzie. And today we're going to discuss what have been the main takeaways from the conference. There has been so much going on, so I'm really excited to see or to hear more about what you have been discussing so far. So Chris, Kasim, welcome to the show.
Thank you.
Yeah, it's great to be here.
Okay, so I think I'm wondering, what have you been hearing? There has been a lot of different conversations and definitely a lot of different sentiments across the show floor. So could you share what have you heard when talking to developers, utilities, investors? There are so many things going on right now.
Yeah, I think in terms of what everybody's trying to get their heads around right now is, the foreign entity of concern restrictions that were passed as a result of the OBA, right? I don't think there are really any answers right now. I think everyone's just very confused. I think lots of manufacturers are planning certain things and they're saying, hey, we're gonna do XYZ, we're gonna have manufacturing in this location, or we're gonna change our ownership in this structure. I don't think any buyers are really taking them at face value right now. I think everyone wants to make sure they do their due diligence before they actually commit to anything.
Yeah, we have been hearing a lot on the solar side too around. On the manufacturing side, is should I be investing in developing this entire fiat compliant supply chain, even though it's possible that we don't need it anymore next year or 2 years from now? Because obviously the investment for these types of factories is long term, right? And it's such a large amount of money that it's difficult for the manufacturers right now, and also for the investors is making a decision on, should I really want to invest in this type of asset now or no?
I have experienced a vast, wide range of emotions with the people that I've talked to.
Yeah.
People who are angry, very angry. Angry about the policy-making stance and the whiplash that they've been having to deal with and just all of the uncertainty that they're having to navigate. I have heard optimism from those who are saying, there's this big wave of demand growth coming and there's no way that solar storage, wind, renewables can't be a part of all of this. I have heard people express lots of confusion, manufacturers are telling me this, my lawyers are telling me this. How do I figure out what to do, what equipment I can buy? I've talked to people who've been laid off here as well, right? This has had a real toll on the industry. There are definitely some companies that have been rationalizing the portfolio of development projects that they have.
Yes.
Some companies who are just exiting and leaving the business altogether as a result of the changes. And then I think others, vultures isn't quite the right word, but who are sit here and saying, I can see capital constrained companies out there that have a lot of early stage projects are struggling to get capital. And I can see a rationalization and consolidation phase happening in the industry. And I am here to capitalize on it because I have confidence around the opportunity that's going to exist. So really, it's the full range of human emotions all in one place with 40,000 people.
Yeah, and it's funny, I think we all share those sentiments, right? A single person can feel all of that at the same time. And I think you touch on very interesting points. Something that I've been hearing is we should be expecting this shift. I don't know if actually it's something that's going to happen or it's already happening. Developers are focusing on assets that are either operational or I would say asset owners, or projects that are already under construction, this rush that has been driven by OB3, now having to meet the physical work test, so more pressure on the EPC side. But early stage development seems like it's just taking a stall. We're not seeing that much progress, and it's naturally tied to the uncertainty and the confusion that we're seeing in the market. So wondering if you're hearing similar things.
Yeah, well, I think part of it is that there's such a focus on execution right now and executing on the projects that are closest to getting to construction and orienting all the priorities of the organization around that and figuring out how they have to change to be able to capitalize on this, right? So does that require more upfront capital that has to be put at risk, getting investors comfortable with that if that's what's required, figuring out the details of fiat compliance and how I order the long lead time equipment and things like that. So I think definitely a focus on like what can I do now and how can I execute right now.
Yes.
And a lot more investor interest in those projects too.
And one other like dynamic that I have seen as well is like there is definitely optimism and more optimism than I was originally expecting on the show floor. It's also reflected on the attendance. We had a chat with Sean Gallagher from SEIA, and he was telling me that there were 35,000 attendees, which is like quite high. I was expecting more in the 20, 25 range. There is optimism, but I think the approach from a developer versus an OEM versus an investor is completely different. So there is hope, but the market reactions are quite different. So what have you heard on that front?
I've seen investors with optimism. I've seen investors with pessimism. I think even the investment community is divided on that. I actually think what this reflects is that it's a time of like extraordinary uncertainty. Everybody has a tendency to say this, like this is the most uncertain time. Like, I think for this industry, this is the most uncertain time, right? Because you just think about our own forecast, right? We could have another change of administration 4 years from now.
Yes.
It could be another whiplash, an entirely different direction. You know, if you take a long-term view on what the arc of the industry has been, it has been a long-term trend towards more decarbonization. We're in a certain time now, we could come back to that. You talk about like data center demand. Nobody really knows what it's going to be, right? We talked about U.S. utilities committing to adding 99 gigawatts of demand now, which is a huge number, but it's also fully plausible that 99 gigawatts of data centers come online and only run at half capacity.
Yep.
Like it's possible we get to 99 and AI world has exploded and it's not nearly enough, right? Like, so the range of uncertainty is so huge, which I think is part of the reason you see so much difference of opinion of what people are experiencing. I will say specifically on the like EPC side and things like that, I am hearing a little bit that like, while there's a rush to get deals done, at the same time, there's so much uncertainty that it's making it really challenging to get deals executed.
Yes,
and I think that's consistent like what your data shows on the amount of like new projects going into PPAs versus what's coming online, and that pipeline being the smallest it's been in a long time.
Yes,
right?
Correct.
Like that's an alarming stat to me when I look at that. And I think people, like everybody's talking about pulling the trigger, but there's been a slowdown in actually pulling the trigger, which is also making people nervous. And it's that dichotomy. Like, could be a rush, but yet not a lot of deals are getting done.
Yes, exactly.
That's why we are where we are.
Yes.
I think the only thing I was going to say is, I think to your point about like it being such an uncertain time. I mean, like the way that I think about it in my head is like I think with data centers, I mean storage especially, right, being this really important dispatchable technology that could help meet that near-term load growth. These are both things on like at very early stages in their, you know, probably exponential trends of deployments. And so I think when you're trying to, I guess like from a math perspective, like solve an equation where you have like two variables going on this like different exponential trends, like there's going to be so much uncertainty with that.
Yes, but it's like in storage, you know, I heard a developer told me about an experience they're having right now where the utility is saying to the data center company, if you want to bring your capacity online, your data center, bring capacity with you. And the data center company has identified a storage asset, right? And it's circumventing the normal queue process for this expedited queue in SPP because it's been nominated by a utility to do it, which is what's required to make that happen. But this is like deals have not gotten done this way before. There's so many questions around how does that work? How does like the network upgrades that are being done in separate queue process apply to this expedited queue process? What does it mean to have the utility in between the two? Like, what does it mean to have the utility nominate me? Like, does that mean they're going to sign a PPA with me, or is this still uncertain? And so there's just so much that's changing in real time as well. That's making it challenging.
We're seeing a lot of innovation. I think like people are thinking very creatively about how to address the many policy challenges and like execution challenges that we're seeing in the market. So I guess like something that we have been covering in the podcast over the past few interviews is like the need to find creative ways to optimize interconnection and to get the most out of the assets that we already have. Like Rez was saying like they're looking forward to like having like more drones and more software to optimize wind turbine operation, and they can increase, I think they mentioned like 10%, up to 10% the output of a facility that is already there. So I'm thinking that we're going to be seeing more and more of that. I wish that we can see more on the utility side, particularly on how they're managing these new load, and as you mentioned, like how they're bringing load and capacity together at the same time, because it needs to happen, right? Like that synchronous connection of both. But also on the ISO side, it's like becoming more efficient in the interconnection processes. And I don't know if it's a matter of having more AI, more creative solutions on the administrative side, or just exploring any other options that are like related to the policy side. We have already seen some progress for quarter 2023, but definitely there's still a long way to go.
Yeah, but that is an area where a lot of progress is happening.
Yep.
SPP and MISO interconnection queue processes are accelerating a lot from what they were before. Record amounts of projects both coming out of queues, which is probably a good thing.
It was kind of needed, right?
That was the intention of the policy reforms that have been instituted. It's also partly a function of the fact that more and more projects are actually finding out what their interconnection costs are and saying, this doesn't work for us, we're not viable. So yeah, definitely more to do, but it's like there are a lot of areas where kind of progress is being made.
Yes, and we have explored a lot of that during the conference, and I'm sure that we're going to keep hearing more and more about utilities coming up with new ways to interact with the data centers, with new generation, the ISOs rethinking about how they are accepting and evaluating and planning. I think planning has become crucial, or now more than ever. So lots of creativity on how to address the challenges that we're seeing in the market, and hopefully we'll be seeing more and more solutions coming online over the next few months or years. We'll see. We did a presentation earlier today. It was a launch briefing with the Solar Energy Industries Association. So could you tell me a bit about the takeaways of each of the things that you presented?
Yeah, well, it was great to hear Abby, the CEO of SEIA, talk about how she uses our data every day. One of the few things that she uses every day.
So the Solar Market Insight Report. So for our audience, you can download the executive summary in the Wood Mac website.
So I love that little shout out that she gave us.
Yeah.
And and I think that she actually summarized it well, where she said, at a very high level, we have this demand growth happening in the United States that is so important to this development of the data center industry and to the manufacturing industry.
Yeah.
It doesn't happen without it. And there's this existential question around an administration that's been openly hostile to renewables about, does that hostility get relaxed to some degree? Because we need all hands on deck to be able to solve this problem to meet the goals. And that's kind of where we are.
Yeah, I mean, I think I liked what you said, which was if this is probably the best time for renewables to lose the tax credits, right? Considering everything else.
That's quite a controversial topic. I think many residential installers in particular would not agree with you.
Yeah, and like I also said, it's not great for climate policy, right? Like that is the real casualty.
Like I think it's really interesting how. I mean, like as like I think we were talking earlier this year about like in the past 4 years, there's been such a shift in the conversation. Like, like I think like 4 years ago it was about ESG. Let's like, how do we help be a part of the solution? And now it's just like, what kind of power can we get on the grid? If it's clean, great. But yeah. Yeah,
I have not heard the word climate change very much at the.
It's really funny, right?
Yeah.
Like before, I think
that's
last year. That's
always been such a part of the solar industry, and I'm not hearing that.
Decarbonization, net zero, climate change. no word of that. Now it's energy independence, energy dominance, resiliency. Like those are the key topics that everyone now is talking about.
Yeah, but on the ending of subsidies, just to parse that a little bit better, right? Like our own data shows, at least right now, this will probably change, but at least right now, a solar facility, utility scale solar facility that you build that is not eligible for the ITC is about 20% less expensive to build than one that is eligible for the ITC. It takes away some of the benefits. I talked to a banker who's been raising capital for 40 years for power companies. He said every time I tried to bring in a new investor into the energy sector, 80% of the conversation is about subsidies and will those subsidies continue into the future and how does that affect my investment? And he's like, and I lose a bunch of investors.
Yeah.
He's like, you do away with ITC, you do away with tax equity structures, which are in themselves inherently expensive as well.
Yes.
It's like, this will bring lower forms of capital into the market. Think about the administrative burdens of like wage and apprenticeship programs, tracking where every single component of your equipment comes from, the lawyers involved in documenting all of that, right? There's a lot of things that go away when the subsidies go away. And maybe most importantly, it also takes away an argument that opponents to solar and wind use against solar and wind. So there are a lot. I mean, this banker has vociferously told industry executives, embrace the end of subsidies.
I think it's obviously a very controversial topic, right? Yeah, I mean, like I talked to some of my friends and like who work in other industries, like medical or like big tech or something, and I'm like, man, it must be kind of nice, I guess, to work in an industry where like you're not so dependent on this like huge subsidy, which is like nice to have, like it's great, and especially from the perspective of, I mean, in some way you could probably think of these subsidies as being like pricing the externalities of CO2 emissions, decades in the future that we're not doing right now. So I think there is an argument to keeping that, but
yeah, that's the thing. It's the only climate policy the U.S. has at the federal level, really. Like making renewable energy as cheap as possible was the approach to reduce emissions.
Yeah.
And that is the casualty. That's the casualty of the end of subsidies.
I think I heard like on stage Jigar Shah talking precisely about this. Like energy is inherently political, but I think over the past few years it has become so complex. So as you mentioned, when you remove the subsidies, you remove like all the administrative burden, all the added risk, all the complexity of the transaction itself. So just let the market forces act on themselves. So I think it's a moment of opportunity, definitely, but the industry as a whole is just slowly like accepting the new reality and rethinking how they're doing business and how they are financing projects and how they are sourcing. And it's going to be like a continuous path of learning and see how we can all continue building projects right now in the face on the policy uncertainty that we have been discussing over and over. Sorry. Okay, we're good. I wanted to touch on supply chain. So I think like obviously there's all the generation side, and that is extremely relevant and needed to meet the impending growth in demand. But there is the like the Trump administration has been very vocal about developing a U.S. supply chain, but it seems that the policy actions that it has taken are not necessarily driving the industry in that direction. So I'm wondering, like, what are your thoughts on the storage side, on like what should we be expecting on the supply chain front, and any challenges and drivers to have more U.S. energy storage manufacturing?
Yeah, it's a big question, obviously. The storage supply chain. I mean, or I guess I'll back up a little bit. I mean, I think looking at solar, right? I think solar provides a really helpful analogy for how to think about the storage supply chain and how it is going to evolve, I think, in the next few years. So, solar, a technology that originally was invented here in the U.S., right? A long time ago. China got really good at manufacturing these things, as China does, right? And so kind of like, I believe in the early 2010s, was it, like a lot of panels were coming from China until administration decided to say, hey, these are some unfair trade practices that we're seeing here, so we need to put some tariffs, some AD/CVD, whatever, like unit, whatever acronym you're talking about. Eventually that moved, elsewhere to Southeast Asia. kind of has become a game of whack-a-mole, it seems, to just, okay, like if they're circumventing these duties here, then we're going to place duties there, and then it's going to move somewhere else. And so I think storage, it's kind of along a similar path, right? Like I think it's a technology that is like a lot of good research, like fundamental R&D is happening here, especially in the realm of like long duration storage, some non-lithium chemistries as well. But yeah, China has just gotten really good at manufacturing these things at scale, and I think we're in that process of folks trying to get more of that onshored. I think something that we're seeing right now is that push to Southeast Asia. I think over the next 5 years or so, I think we are going to see domestic manufacturing increase, from 10% of demand today at the cell level to anywhere from 30 to even close to 100%. If we do see a lot of
that's a huge range of uncertainty.
Yes.
Exactly, right?
Yeah.
And that has big impacts on like how much these project costs, right? Because like whether or not a project can get a domestic cell is going to determine more or less whether or not it can qualify for the ITC. Definitely supply chain is probably going to be the biggest question. I would say developers are going to ask themselves for storage this year.
I think we're going to see a lot of movement after the fiat guidance is out. Like that's going to drive a lot of investment decisions for storage, for solar. So we all need to stay tuned for that.
Definitely.
Yeah. I think one thing I did hear about actually, right, was somebody acquiring a bankrupt battery manufacturing facility, working to take it out of bankruptcy, and needing to like rebuild the factory actually, because kind of like the technology that this was building before was not what the market wants. And he's saying the quickest way to get a battery or to get a manufacturing facility built is to buy all of your manufacturing equipment from China.
Oh, yeah.
Yeah.
And
all the IP is in China, all the expertise is in China.
Yeah, and he's like, so this is a huge hurdle to us being able to expand manufacturing capacity. And it just, not that it matters, but it strikes me that we're going down a wrong path. I just remember, like I did a lot of work in China 25 years ago, where China was opening its door to every US company to come in to gain the expertise, right? And it strikes me that if we are behind and we need to catch up, but we want to have the ability to do it here, a better way to do it would be to go about working with the Chinese to do that. And unfortunately, that's not the path that we're going down. Yeah. And some of the other things I've heard, we cited in our own statistics, how manufacturing construction expenditures are 2.5 times higher than what they were in the previous decade. So just like it's challenging getting an EPC crew for a solar facility or to build a gas-fired turbine, if we continue to see expansion of manufacturing, we just don't have there's going to be issues with expertise and cost to be able to do this in a short scale.
And even like tying it back to the demand question, the more manufacturing we have, where are they going to get their power from? Getting the site, getting all the permits. So it's like more complex than just let's build a factory. Right?
And getting into the large load interconnection queue, because battery cell manufacturing is very energy intensive.
Exactly.
Wafer is very energy intensive. Polysilicon even more energy intensive, right? So you're going to be behind all these data centers that have already been in the queue for a fairly long period of time.
Yes.
So there's a lot of challenges associated with scaling right now, manufacturing in the US.
I think I would like to wrap up the conversation. We cannot leave without talking about data centers and AI.
Of course.
And how are we going to meet all these new demand in the face of challenging policy for renewables? So what are you hearing? What are your thoughts?
So there are a lot of places on the globe now, Singapore, Alberta, Ireland. Alberta hasn't yet had it, but they see it coming, where they see that the ability of their systems to absorb this much power demand is constrained. So they have put in place limits on how much capacity can be added to the grid each year. I wouldn't be entirely surprised if we see something like that in the deregulated markets like ERCOT or like PJM.
Yeah.
I think you mentioned utilities innovating. A year ago, like here a year ago, when you talk to like a developer or utility about the conversations that they were having, they were talking past each other to a certain extent, and not able to find the language and even the tools to analyze it.
Yeah.
To think about creativity and all the options to how to get something connected more faster to the grid now. I think there's a lot more conversations now happening in a very constructive way around how many hours of interruptibility can you provide me with your data center. And it's not really providing it through managing the demand. It's more, most of these solutions are by putting some type of generation behind the meter to provide that interruptibility, or storage. A lot of like storage coming into this conversation to find ways, to be able to get the grid connected to the grid faster. There's even, I think this is like best practices in what we're seeing some utilities doing, where they're actually publishing a map of their system. They're saying here are the lowest cost places to put a data center on our grid from like a grid upgrade perspective. Like FP&L did that in Florida, as an example. You are seeing like new innovation things that will help accelerate that process, but 99 gigawatts of commitments so far, right? There's going to be more than that. That is a massive challenge for the utility industry to be able to meet.
Yeah, I don't think people are probably talking about that figure enough. It seems pretty insane. I forget if you mentioned already, but I think that's it was 15.5% of U.S. peak demand.
Yeah, roughly.
Right,
yeah.
right. Which is absolutely insane. Yeah, something you mentioned, something that's been a really hot topic at this conference as well for me with my conversations is behind the meter storage.
Yeah.
I think people are kind of in two camps on that. I think some folks are really bullish on it. I think they seem pretty confident in the ability for like whether they're like a data center or like a C&I customer and their ability to save money by having some behind the meter solar and storage, or in some ways just to get operational quicker. But then in the other camp, and I think based on some of the internal research that our Grid Edge team has done, if you look at like the types of power quality that data centers need, behind the meter generation isn't going to be sufficient or reliable enough to actually provide what they want. Yeah,
our data is pretty clear on that, right?
Yeah.
Tracking 590 data center projects, and only 6% of them have evidence of co-located resources.
Right.
And very, 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 very few completely off-grid projects going forward. I think we're going to see a lot more co-located resources than what's reflected in what we're seeing in the data right now.
Yeah.
But it's grid connected still.
Yeah. To give you like I guess like the other side of the spectrum, right? Like I was having a chat with a manufacturer who was interested in, like, their whole business right now is like trying to sell to data centers and do behind the meter storage in some way, and they were telling me that like they're pretty confident in 30% of data centers going to have behind the meter generation.
Wow.
Which
that's sizable.
I'm like, how is that? Like, how is the figure so different from ours, right? So I think something to dig into for sure.
Yeah, and there's been very little conversation about like geopolitical issues here. I haven't really had a conversation with anybody about geopolitical issues this week. But all of this is making energy very, very expensive.
Yeah.
Right? The cost of building a solar facility in China is about a third of the cost of building a solar facility here. How much cheaper is storage in China?
Oh, China, I would say maybe half or something like that. Yeah.
And China has for years been building generation to meet demand growth, so they have the infrastructure to be able to do this. All of these things that we are doing to try to figure out how to accommodate data centers is just making it more expensive to power the data centers compared to the China situation, which is bringing a lot of much lower cost energy. Everybody needs to be cognizant of how all of these things that are solutions are coming at the expense of the data center companies because they value the electricity so much right now.
Right.
But they are paying a very, very high cost to be able to get this energy.
Perfect. Well, Chris, Kasim, thank you so much for joining in today.
Thank you.
For our audience, remember, if you want access to all the research, like everything that we have talked about is available in our website, woodmac.com. You can learn more about solar, storage, data centers, grid edge, what's happening with gas turbines. Like any question you may have on energy, you can check it out at woodmac.com. You can contact us for more information. And we'll see you next year at RE+. Thank you so much.
Thanks, Sylvia.